With elevated interest rates here and probably going nowhere for the near future, people are starting to get creative with their financing. You've probably heard of the 2-1 rate buy down. So what the heck is that? Stick around, we're going to get into that today. Hello Central Maine, it is your realtor Nick Isgro with eXp Realty, and as I just said at the beginning, today we're going to talk about a 2-1 rate buy down and explain exactly what that is, what it means to be buying down your rate, and how that might help you bridge the gap between now and the future if you are looking to buy a home in the current market right now. Now before I get into that, I want to welcome you here to the channel. If you've never been here before, we cover all things real estate here in the state of Maine, but particularly in the Central Maine market. Now, if that's of interest to you or adds value to your process into buying and selling of homes, do me a favor, go ahead and hit the like button on this video, hit subscribe, knock that little alarm bell, you'll be notified every time I put out new content. All right, now with mortgage rates hovering around 7%, mortgage lenders are starting to see a lot more borrowers looking to get creative when it comes to the financing so that they can make that upfront mortgage payment a little bit more affordable, with the idea that down the road they would be able to refinance when rates go back down, which doesn't look like it's happening perhaps this year. This really falls under the umbrella of that old saying, marry the house, date the rate. The idea being that if you need a house for your family, you're looking to buy a house, and this happens to be the right time, which for me, the right time to buy a house or not is not really indicated or dictated by interest rates. It's really about what's going on in your life. If it's the right time, it's the right time. If it's not, then it's not. But if it is the right time, you want to be able to get into that home, but you do want to try to make it a little bit more affordable. And as we know, just like markets, interest rates are always cyclical. They go up for a period of time, then they go down for a period of time. And in fact, if we are headed towards an economic recession, which it looks like there's a good possibility that we are, historically speaking, the majority of time rates actually go down during the time of the recession. So there's good reason to believe that sometime in the near future, after we get out past 2023, that rates will end up going back down again. So that being said, you want to get into a house. Well, one of the creative ways that more and more people are at least learning about, if not taking advantage of, is the 2-to-1 rate buy down. So what is a rate buy down? Let's talk about what a buy down is in general. In general, a buy down is a way for a borrower to potentially qualify for a lower interest mortgage loan, and that could be either for the life of the loan or it could be for a certain period of the loan. So a 2-1 buy down would actually allow the borrower to have a much lower rate on the first year of the mortgage, a slightly higher rate the second year, and then they would pay the full interest rate by the third year of holding the note. All right, so how does a 2-1 buy down work? Well, it can be done in several ways. The first way is if you are the buyer, you could show up at closing and actually pay points towards your mortgage loan. The other way is you could put a lump sum down with the lender that would be held in an escrow account that would be used to subsidize lower payments during that beginning period of the loan. The other way is you could ask for it as a seller concession. And this is an interesting point here, because as homes are sitting a little bit longer on the market, and as inventory starts to increase, becomes a little bit more competitive out there, although we haven't seen a big softening on pricing, we are starting to see a lot more negotiation from the sellers in terms of what they're willing to negotiate with the buyers. And while in the past it was probably a more standard thing to be asking for, some of the closing costs to be paid, if that's not really where you're at, and you have the room to do it, you could ask for a seller concession of paying those points down on the mortgage so that it would be subsidized as their concession to get that rate down. So it could come from either the buy side or the sell side in order to make this come together and make it happen. Now, if you are the borrower, here's an important note. The FHA, Fannie Mae, Freddie Mac, all of these governing bodies are going to require the borrower to qualify for the full mortgage payment from day 1 through year 30. So that's just an important note to keep in the back of your mind. It's not like you can have less qualification and kind of skip through the little payments. It's really about you wanting to get that lower payment just to ease things up in the beginning, with the idea that there's the potential for refinancing down the road and getting a lower rate, but buying yourself that time on the front end. So what are some of the pros of doing the 2-1 buy down? Well, it just depends on your particular situation. It could be you just want to free up some of your cash flow during those first couple of years, not have to go towards the mortgage payment, pay for renovations, new furniture, things like that that you have going to the home. The other thing could be you might be in a situation where you're expecting your income to rise over the next couple of years, and you can kind of see that path in front of you, and you're just trying to give yourself that little bit of extra time, a little bit more flexibility on the front end. And of course, like we mentioned on the front end, there's always the opportunity that you're just buying yourself some time so that you can refinance down the road. And I think there's a lot of borrowers out there right now that do believe that we may be headed to an economic recession. We probably are in the next few years headed to declining interest rates again, and just want to give themselves that time. They're willing to take the gamble. They know this is the right time to buy the house for them and for their family, and this is a way to make that a little bit more affordable until they have that opportunity. All right, so what are the cons of this? Well, if you're on the sell side and you're giving this as a concession and you're putting money towards the closing costs of the transaction, this is going to increase the closing costs of the transaction. Those point buy downs are definitely going to do that. If you're the borrower, the risk is a little bit more on you and you're the one paying for it, because the risk for you, depending on your situation, is you might not be able to refinance. There's no guarantee of lower rates down the road. Maybe your income doesn't rise. You just want to make sure that you talk through all of these things, both with your real estate professional that you're working with, as well as your lender, because having that team of professionals around you is going to be important to make the determination of whether this is the right or not the right move for you to make, depending on what your motivational factors are. So that is it. Just really quick video today. Hearing a lot of chatter out there on this rate buy down that a lot of borrowers frankly are asking about, because they're hearing about it, they know what's going on, and even if they don't end up pulling the trigger and doing this, it's something they're asking about, and it's something that you might hear about and be interested in if you are on the seller side and it's asked of you to pay for it, or if you're on the buyer side and you're looking to work this into part of your overall financial picture. And of course, the point of this channel is to make sure that you are the most up to date on all of the relevant information to navigate this current housing market. Now, if you are in the market right now, if you're looking to buy or sell, of course, if you're looking for a real estate professional, all of my contact information is linked in the post below this video. If you have a comment on this, or you have experience with this, or maybe you just have some thoughts about whether this is a good and advantageous route to go or whether it's not, go ahead, as always, drop a comment below. Love to hear from you there. Love to engage with you in that area. And of course, as always, I appreciate each and every one of you for sticking around to the end of this video. And until the next one, I'll see you next time.